Hello there, you're watching Your Trades on ET now with me Snehisha and with me is Priyanka. And well, what a trading session we've had actually today. 0.7% lower is where we have ended on the benchmark index Nifty 50, 24,117, barely above the 24,100 mark. But well, it's still better than where we closed yesterday, so not much to complain about. But sensex also in tandem with Nifty, 0.7% cut, almost a 600 points, a 580 point cut coming in on the sensex today. India VIX has once again spiked up 2.6% higher. Nifty Bank has ended rather flat, but nonetheless in the green. So good move at least coming in for Nifty Bank, managed to hold his ground on a day as volatile as today's was. And sectorally long, let's take a look. Pharma did pretty well for itself today. That was the index with that was the top gainer today. 0.3% gain coming in for Nifty Pharma. There you have it. Alchem, Lupin, Natco Pharma, Ipca, Cipla, Oro Pharma, Mankind, all of these companies have done, all of these stocks have done pretty well. You had media, financial services and banks. These were the only four sectors in the green. On the flip side, auto was in the red. You have Nifty IT, that was the biggest loser today, down almost 2%. Metals also followed suit, 1.7% cut coming in on metals as well. SAIL, Jindal Steel, NMDC, Tata Steel, anywhere down between 2 and 3%. Nifty Realty also on the flip side, deep in the red today after seeing some respite yesterday on the back of that indexation announcement. But well, yes, Nifty Realty also 1.2% lower. Quickly, let me also mark some quick buzzers in today's trade. You had Honasa, that was up almost 9%. BSE, Route Mobile, Triveni. On the flip side, you had a whole host of stocks in the red as well. Lemon Tree, big loser today, 9.5% lower after a very weak set of Q1 numbers. Balaji Amines, Chemplast, AstraZeneca, Kaplan Point, RVNL2 almost 5% lower on the back of a weak set of numbers. But well, yes, the big news today was that RBI has kept the repo rate unchanged at 6.5%. Now, while this was largely expected, maybe the street reacted slightly negatively to this news because the repo rate has been maintained and the stance still continues to be withdrawal of accommodation. But well, yes, all of this stood out to me. What stood out to you today, Priyanka?
In fact, a hawkish stance what we saw from the RBI side. But then the main concern is that the global worries continue to weigh on the Indian markets today also. What we saw, the kind of opening we had from Asian market yesterday, how US traded, and of course somewhere in the kind of Bank of Japan who released their summary of the monetary policy, and some of the members were of the opinion that there could be further hike. That's what spooked fears again amongst the global markets, and that's what we saw in India. There was no follow-through buying today. In fact, we struggled to keep the positive momentum throughout the day. Nifty was trading below 24,200 levels, 24,150 level. Bank Nifty flat, broader market trading at flat levels. But then few of the stocks, BSE, all cylinders firing. In fact, the kind of revenues the BSE posted and a contrast difference between BSE and NSE, the kind of revenue growth, PAT growth or margin growth. BSE was one stellar stock today, strong growth in all segments, derivative segments, especially on the low base. That's one stock which was up in trade throughout the day. Earning momentum wherever there was, we saw a clear reaction from the traders. ITD cementation margins were up where stock was 11% up. On the flip side, GMM Pfaudler, EBITDA margin declined by 300 BPS on Y&Y basis. We saw impact coming on the stock, and so was on Balaji Amines, which was down by 7% here. Also, there was a deep cut on the EBITDA margin, nearly 643 BPS points. So overall, all the sectors up, barring pharma space, they were struggling throughout the day to be in the positive zone, and in fact no follow-through buying. But then a lot of stocks from the broader market, from spaces like auto ancillary, capital goods, even chemical stock like BASF India, many stocks from fertilizer like Coromandel, GSFC, at least they were trading with a positive biasness. But stocks like Suzlon, is not far that we are going to reach a market cap of 1 lakh crore on Suzlon. It was up 5% again today, nearly levels of 72, 73 levels what we saw on Suzlon. So one needs to really cautiously trade in the market. Global worries are prominently visible across the markets. Now, from here, what direction could one possibly anticipate on indices? To help us navigate the way forward, we have Aditya Arora to talk on this. Aditya, welcome. Tell us, how would you make an opinion here? Because yesterday when we were speaking to Ruchit also, he also clearly mentioned that if markets are not able to sustain above 24 250, 350, there could be possibility that no follow-through buying comes in. Wait and watch mode. Do you think that from here we could slip further, or is there a cushion? Is there a support?
Hi, good to be on the show. Look, I think markets are weak. Overall, we are drifting down every day. So we made top around 25,132 on Nifty future. And yesterday was the only day wherein we saw good green candle, and every day it has been a red candle. And today also we broke yesterday's low. So the market texture is clearly bearish, and one shouldn't try to pick the bottom, because we never know where the bottom is, because market structure is weak overall. Whether you look at the domestic cues or the international cues, things are pretty bearish. And yesterday also in the USA, we saw good correction in Dow Jones, Nasdaq, and S&P 500. So overall, one shouldn't try to pick the bottom and actually short the stocks on the bounce. That could be a good money-making opportunity for traders in India.
All right, so don't pick the bottom is the word coming in from Aditya. And Aditya, you said that this is a bearish market, right? So amid a market like this, what would be your picks? What are those spaces that you are still seeing some value in? And what would you recommend buying for our viewers?
So I have few stocks which are acting against the trend of the market, which is down. So Just Dial was buzzing in trade today, and showed great strength. So there could be a possibility of outperformance over there. So Just Dial is a buy at 1245, 1170 is the stop loss, 1320 is the target. Second stock MRF, clearly outperformance. We saw outperformance today, which was plus about 4% or so. This could be bought at 1,40,500. Stop loss is 1,36,000, and target is 1,45,000. Apart from this, I think Nifty Pharma index could outperform. This is the index wherein most of the components are doing well. And second one would be Nifty FMCG. This is also showing good strength. So these are two hiding space for investors considering the overall market scenario. But overall texture, I believe, is bearish, and there are very few pockets which can give absolute positive returns. But Nifty Pharma and Nifty FMCG could give relative positive returns.
Pharma and Nifty FMCG is where the margin of safety lies, and your two value picks which you've shared amid a weak market. The sentiment looks really weak here. That's what Aditya compiles for us from here. Thanks very much, Aditya, for your time and your insights on the market. Let's go further. The long-term bull market is here to stay. That's the word coming in from market guru Mark Mobius. Believes the rally will sustain as long as global indices, the likes of S&P, continues to rise with bouts of correction now and then. He was sounding very bullish on Indian equities. He also added that the domestic investor that has been steering the upward move in India. Let's listen in what exactly he said.
I believe the long-term bull market is intact, and because the U.S. is leading in this regard, you can see there's been a correction, but it's not a big correction in the context of what we've seen in the past. So as long as that S&P 500 continues to move up with corrections along the way, 5%, so forth, then I believe that you're going to see globally a very, very good bull market in most countries around the world, particularly India. I believe flows into Indian stocks will continue, and as foreign investors become more and more comfortable with going into India and making it, and of course, if the system is made easier for funds to come in, then I believe you're going to see a continuation of this situation where more and more foreigners have holdings in India. It's not foreign investors who drive the Indian market, it's domestic investors. It's interesting that the RBI recently said that they wanted the banks to attract more deposits. And probably one of the reasons for this is that there are too many retail investors going into the market and gambling. And it might be a good idea for them rather to keep some money in the banks rather than in stocks. But that's just a very short-term kind of view. Right now, large cap are more attractive. In the past, the mid cap was more attractive to us. But now large cap is where we want to be. The emphasis for us now would be on raw materials. But sure, Reliance and these other big stocks look quite good, particularly in view of the fact that they're going to be benefiting from this incredible growth in India. So generally speaking, those large caps with strong balance sheets will do fine.
All right, that was the word coming from Mark Mobius. But on that note, we're going to slip into a very short break on this edition of Your Trades. We'll be right back to talk about the trading session that we saw today. You stay tuned. Hi there, welcome back. Still watching Your Trades on ET Now. Thanks so much for staying tuned. Let's take a look at what the derivative outlook is looking like. And for the August expiry, Nifty is seeing some long unwinding happening. So that's slightly negative coming in. And same can be said for Nifty Bank as well. Long unwinding being seen over there as well. Let's pull up India Wix. Let's take a look at what India Wix did today. At 16.7 was where the India Wix was, 16.6, almost a 3% uptick coming in on that front as well. Now let's take a look at what the active calls and puts are showing. Active call writing being seen for the 14th August expiry at 24,200 and 24,300, making 24,300 your resistance level. Remember yesterday this was at 24,400 and has slightly tapered down and come to 24,300 today. On the active put side for 14th August expiry, you have put buying being seen at 24,100 as well as 24,000 levels. So well, these are your levels to watch out for on the index.
All right, so that's from the derivative side. But then now let's catch up with the big story of the day. With markets hitting a life high multiple times during the first quarter, NSE and BSE both were two of the biggest winners of these on the back of the rising volumes and increased optimism. But with the SEBI announcing F&O curbs and recent volatility, how do the two players stack up against each other? Sharad joins in with the comparison. How the bourses performed.
Well, yes, both the exchanges, NSE and BSE, have come out with their quarterly numbers, and overall performance of both these exchanges have been very strong, looking at strong on the capital markets. And now if you look at the numbers itself, the revenue growth for NSE was almost 51%. For BSE, this went up to 150%. PAT growth, BSE was 253%. Now, of course, in the base quarter, there was an adjustment for exceptional items. But look at the companies, both the companies, margin growth have been phenomenal. And the EPS numbers also higher side for the NSE because of its sheer size, that's almost 52 rupees. Also, looking at the operational numbers, both the exchanges, if you look at it, their average daily turnover, that has been a very strong, especially for the cash market, doubled for both the exchanges. The cash market share, of course, the BSE having a lower side and NSE having the major chunk of it. The derivative market share, that has actually been increasing for BSE over the last 3 to 4 quarters, coming in at almost 25%. Now, this is on a calculated basis, which we have taken. BSE and NSE, there is a key commentary also taking place, and BSE, it's firing all cylinders. The Star Mutual Fund platform has performed really well, almost 72% strong growth coming in the derivative segment, of course, because of a lower base also, and contribution coming in from the IPO and the transaction related services. Also, lastly, NSE's strong operational update has been really good, especially across the segments. The growth has been even. And lastly, but the street does expect that there might be an impact for higher provisioning coming in for F&O tightening of rules, which were announced recently by SEBI as well. Because of the size of NSE, the impact might be a bit more. But overall, the exchanges have come out with a stupendous and a very fabulous Q1 numbers when it comes to the operational numbers as well as the financial numbers.
Thanks for taking us through that very interesting observation you've drawn out between BSE and NSE. But time now to talk about some top gainers and losers in today's trade. Contrasting moves came in for some of the earning buzzers today. Godrej Consumers and Balaji Amines were tanking away in today's trade, deeply under pressure. But on the flip side, you had Kim's and ITD Cementation. In fact, ITD Cement was up as high as 11% today. Both of those stocks have soared in today's trade. Let's go across and listen into what their managements had to say. We interacted with all of these managements earlier in the day. Let's go across and listen in.
It definitely remains an aspiration for us to get into double-digit volume growth. I think what's also happening is that we are now kind of coming close to anniversarying onto the low commodity prices, and we've been losing, the revenue growths have been lower than the volume growth till this quarter. We're anticipating that from next quarter onwards, we should be seeing revenue growth ahead of the volume growth. So there will be a 2 to 3% kind of gain on price, which should start coming in. We would want to be in the range of 25 to 27%. That's the range in which we would want the margins to operate in. And we're quite confident using various levers in terms of cost saving. We should kind of sustain margins in these bands.
Volumes, yes, we will be doing minimum 10 to 15% growth in the volumes of the total. And also the EBITDA should be improved, even though on the year basis, we should be definitely doing more than 20% EBITDAs on the total sales. So this is looking into all these expansions will be coming in the part of the financial year. We'll be having those revenues in this financial year. And the next year, definitely all this will be running at least 50-60% capacity will be running even though in the first year of the operations.
Moving forward, the occupancy will keep improving. Here, we are trying to reduce the corporates, which is length of stay, and some of the numbers which has been grown as short-lived elective cases has come up more. So the average length will usually be lower when compared to the emergency patients and compared to the complex surgeries, complex medical cases that will take a longer time to get discharged. That's why the mixture of all these things will brought down the ALOS.
The due diligence has commenced and it's at a preliminary stage right now. So, that's where we are right now. We'll have to wait and see how things progress further. And once we get some clarity on this from our parent company, we'll be informing the stock exchanges about it. Pretty hopeful of a growth of, anywhere between 20-25% on a year-on-year basis. I mean, I'm sure you would understand that a growth rate of about 40% or 50%, sustaining that on a larger base would be difficult.
All right, so we heard management from varied industries talking on the growth and the outlook forward. That's all in this edition of Your Trades. Thanks so much for watching.